You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is time to roll out the Thursday edition of everyone's favorite bi-weekly source for all things options related. Yep, it's time once again for the old OB. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the THE Options Insider Radio Network. That won't get annoying at all. Of course, if you like what you hear, anywhere this show is available, in the app stores, on the iTunes, and Audible, YouTube, give it a like, give it a comment, give it some stars. Whatever your platform lets you do does help new people continue to discover the content out there. And then, of course, if you want to go above and beyond, you want to get quality content after Vol Views on Friday, you want to get great pro Q&As during the week, you want to get your name in the hat, it's coming up, listeners. September drawing to a close. We are rapidly approaching the drawing for the September Pro Trading Crate. You want to get your name in that hat. Trust me. I know the Rock Lobster wants to get his name in the hat. You want to beat him to it. TheOptionsInsider.com/pro is the place to go. Once you hit that join button, anytime during the month, bam, your name automatically entered for the drawing for that month. And they are pretty cool. I'm looking at a mountain of stuff here, and we just give it all to you. We're pretty awesome that way. Have you looked at shipping costs lately, listeners? Not cheap, but you know what? We like you folks. So theoptionsinsider.com/pro, the place to go to learn more as we go around the horn and learn who's joining us on the old program today. First, let's go out to the place that we have dubbed CBOE East, where we are joined once again by the FLOWMASTER himself, Mr. Henry Schwartz, holding down the appropriately named CBOE hot seat. Mr. FLOWMASTER, welcome back to the show, sir. How are things in CBOE East today?
Thanks, Mark. Everything's good. Actually, pretty busy. Their teams are getting a little bit more active about coming in, especially Tuesday, Wednesday, Thursday. So we're seeing more faces here. It's busy. The market's been busy. A lot of action. So and it's a beautiful, crisp fall day in New York. So I'm in, and can't complain.
It's that time of year. Everyone's getting back to business. And we see the same pattern here, right here by the studio in downtown Chicago. Tuesday, Wednesday, Thursday, city has some semblance of normalcy to it. Monday and Friday, ghost town. I'm the only person down here. So, yeah, it seems to be the same pattern over there by CBOE East. Then we go up to the hinterlands of Maine, where there are no patterns because it's just him and the locusts. It is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. I also forgot the clam pirates. It's him, the locust, and the clam pirates. Mr. Rock Lobster, sir. How go things on the ever horrific shores of Maine, sir?
Good. It is a little chilly. It's getting down to the mid-30s, and I'm starting to feel like we're going to have some really cold winter this year.
It's mid-30s already?
In the evening, yeah.
Damn. That'll freeze the locusts.
I know, and I'm looking at my dock that is still in the water, so I will be pulling it out this weekend.
I'm not ready for freezing temps yet, or playing with freezing temps. But hey, if you want to kill the locusts and the clam pirates, I guess that's the way you got to do it up there. All right, and also joining us, I don't think it's in the 30s quite yet where he is, because he's not that far from me, listeners. It is the hinterlands of Chicago, where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to Ye Old Show, sir.
Every day's a holiday, every meal is a feast. Always happy to be here.
All right, and we're always happy to kick things off with the trading.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get down to it. Time for the trading block, breaking down what the heck is trading, what is lighting up our tapes today, and coming into the start of the show, at least, we are seeing, you know what, all that concern, all that downside, all that fear, it's all gone, at least for right now, listeners. We are back in green mode, back in rally mode. S&P up nearly 0.75% right now as we're kicking off the show. The Dow, a bit of a laggard, up about 0.4%, and the NASDAQ up almost exactly 1%, so getting a little bit of green back. That said, we're clawing our way back, still just peaking above the 4,300 level out there in the S&P. So still a ways to go if you want to get back to some of those loftier levels we were at before. But for those of you who were sweating when we were threatening 42.5 not too long ago out there in the S&P, at least moving away from that for right now. Then again, 50 handles in the S&P, blink of an eye, and we could be there. So that was the kind of markets we're all living through together, listeners. That means with the markets kind of vacillating around a little bit, we're seeing VIX mostly unched from where we were on Monday. Actually, it's slightly up right now, up about 0.2 of a point at about a 1740 when we kicked off the show, but it was hovering right around unched right before we kicked off the show. Of course, intra-week, we had a little bit more froth, a little bit more frosting on the old cake. We got up to not quite 20, but we threatened it, listeners. 19.5 roughly. We were threatening the logins. You know, I know some of you out there were hoping for a little bit of the logins on vol views tomorrow. Others were dreading it. Alas, no logins, listeners. 1740 when we kicked off the show. But we shall see. 24 hours in eternity. By this time tomorrow, we could have a little bit of a visit from the old logins. We shall see. VVIX, the vol 94, up about a point. VXX at 23, literally unched from where it was on the Monday show. UVXY 16, also unched from the Monday show. SVIX 2830, down about a third of a point. We got the world's biggest SVIX proponent, a.k.a. Mr. Once and Future Dr. VIX. He's joining me a little bit later on TWIFO today. I'm sure we'll have some thoughts about all things vol as well as what's going on in the commodity products. So we shall tune in for that in a little bit. Should be fun. UVIX 340 right now, down 1/10 of a point. Who gives a crap? But we know it's coming, listeners. 10-for-1 reverse split on October 11th. I was hoping for more. I was hoping for maybe 15, maybe even 20-1. That would be nice. But alas, no joy there. beggars can't be choosers. We'll take it. Of course, by the time October 11th rolls around, if past is prologue, UVIX will be back below a 2 handle. And they're only reverse splitting it. That means up to about a 20, if not less. So what are we doing at that point? But anyway, we'll cross that bridge when we come to it, listeners. Vol Q at about an even 20, actually 20.2. That puts it up about 0.2 of a point from where it was this time last week. Let's go around the horn the way we started. Let's go out to CBOE East. Mr. Flowmaster, sir, what's catching your eye out there in, at least for today, a green type of market, sir?
Yeah, I got to admit, I got a little nervous over the last few days. Those down moves were, some of them had some strength to them. It's just been a little bit more volatile, which is why you see it in the VIX, right? 20 definitely was, almost to 20 in the VIX one day. Is actually what I'm looking at. That was the highest we'd seen since since May. So that shakes people up a little bit. I think that, I don't know. One thing I was going to kind of point out, tomorrow's a little bit of a stealth expiration day, right? Because it's a quarterly expiration. Every day is expiration day when you have daily options, right? So, but people still pay more attention to the monthlies and the triple witching third Fridays in the quarters. But the quarterly end options, there are some big positions out there. And so, keeping an eye on what is out there, I think is important. And when we were really kind of dipping towards the lows yesterday, I was spending some time in Trade Alert. Really, just you can actually just say /OI for open interest, where expiry equals step 29th, and there's a few positions there that jump out at you. So that's what I was kind of paying attention to. But yeah, it's kind of like today. Things are a little bit calmer. We bounced. And, it's an interesting market. I think it's kind of, we're kind of all over the place.
We are all over the place indeed as we roll up the coast once again to the dark and stormy shores of Maine. Mr. Rock Lobster, sir, what is catching your eye out there in these all over the place markets, sir?
Well, we have this government shutdown, not shutdown. What's funny is it's sort of odd, like this game they play, because there's the House, and somehow I guess we can fund Ukraine for an unlimited period of time. I don't get where all the money goes. I'm kind of like your average person, right? So the government spends zillions and trillions of dollars a year. But you actually get any, what do you get? Okay, I don't get Social Security yet. I assume I want to get that. I guess I'm paying in Medicaid, but I guess I'll get that later. But as of right now, they spend a lot of money, but the average person doesn't see a whole lot of it. And I think both parties are kind of sitting there, and I don't think they really care much. But you look at it is it possible for them to spend less? And I just all of a sudden it went from kind of obscene, it was too much spending. So you had the golden, you had Clinton and Rubin and Newt Gingrich got together and we could actually balance this budget if we wanted to. Okay, fairly level-headed, right? And then W started to go off the rails, and then the great financial crisis, and then we went off the rails again. And then you had the COVID thing, and we still have spending at the same level, but there's no more COVID anymore. At least what I would call from an emergency point of view. It's still an annoying thing in the back of your throat. But where has this spent? There's no, I don't know. I feel like nobody's minding the store. So now what you have is government by, chaos instead of just spend less, guys. Anyway, and I think now, and it's funny because my wife said to me a couple weeks ago, I wrote a piece in it, and I was I don't remember you ever talking about the government so much when you were a floor trader. It didn't seem to matter as much what they did, but it feels like they have taken such a huge footprint with QE and all this shenanigans buying bonds and this whole having to jack rates up because they basically, I think, been mismanaging, the monetary policy for several years. And like they're so outsized in the in the economy by spending so much. And it's becoming like a problem. And I think it's clearly just whipping around equity markets pretty easily when it didn't used to be that big of a deal. But now it is a big deal just via size. So I think it's with us for the foreseeable future. I like TOSAW. I'm still bullish on America in general and the people in the country. But my gosh, at some point, the spending has to stop growing. And I think we're kind of, with interest rates continuing to tick up, we're kind of at that point. And to be honest, I don't know how the equity markets are going to deal with it. But the only thing is that the fact that interest rates go higher means the government has to spend more money on interest, and they now have to pay for all the stuff they're borrowing. And at some point, you would think it would make them stop. It just hasn't happened today. And I think that's kind of where we are. So I think stocks are trying to find their way back somewhat. But, you keep looking at, I have not dipped my toe in the bond water yet at all this year. I got out of them, I don't know, a year or two ago. I don't remember when it was. Once they started this whole QE thing, or when they said they're going to start raising rates, or they were going to stop. They're going to stop QE. And I mean, even today, like you're still seeing like yields are still going up and up and up. So I think the market is trying to get around that. But at least for right now, I think it's still a problem, and it has not gone away. So that's the thing that's like these huge forces just keep like pressing on stocks. They've been doing it. They did it all last year. And we had the AI thing kind of helped but I think things will get better when we start seeing some fiscal restraint, something. And I just haven't seen it yet. That's all. So that's my take on it for right now.
But it's a different kind of spending, Mr. Rock Lobster. It's called inflation reduction spending. So if you call it that,
that's right.
If you call it that, it's actually has the opposite effect of what you're saying. See, it's all about messaging, sir. You just didn't get the message. We'll send you the memo.
I somehow got the message incorrectly.
You pour more fuel on the fire and it goes out. That's the thought process there, I think.
Exactly.
But we'll debate macro policy for another day. You know what? We had our taste of doom and gloom on the shores of Maine. Now we go to the hinterlands of Chicago, where everything is bright and sunny for our dose of optimism. Uncle Mike, sir, regale us, make our day brighter and more cheerful, sir.
Hey, it's like the Lego movie. Everything is awesome. I mean, how can you get any better than that, right?
Let's buy some more S&P, man. We're back almost at your level. Let's just buy it.
I mean, well, what else are you going to do? So, I mean, at some point, just to add to what Andrew's saying, at some point you would hope that we would start spending less, but I don't know of any politician that's ever gotten elected based on fiscal responsibility.
Exactly. That's the problem, right? You don't get votes by cutting spending, sir.
No, you don't. You get votes by saying, well, we don't need to cut spending. We'll just do this, and this, reduce the budget, and it'll pay for itself. You get elected by saying stupid stuff like that. And so that's the system with which we live. So unfortunately, I don't know if we can stop spending. It's like this horrible addictive drug that our government has that we keep feeding them because we keep electing them. So, and that's Democrat or Republican. That's just kind of the way it goes, unfortunately. So we'll see what happens. But that horrible, awful drug of overspending has been going on for a very long, long time, and as has the S&P 500. And even with the overspending, the S&P does find ways to go higher typically. And so that is the dash of optimism for the day that I'll give you. In terms of some things that are happening, it looks like this is kind of a buy on bad news type of market, in that the news must have already been factored in for where we are a lot this week. And we're getting closer towards the bottom, it looks like. But I would definitely, I like these levels. And if I wasn't so all in already, I'd become more all in. But where we're at right now, in terms of what's driving the market today, from a sector standpoint, we actually are getting a little bit of a bump from technology. We have XLK up, not just under 1% on the day, the technology sector. Consumer discretionaries are up, and that's a little bit of a change from the last few times that we've had some bullishness of where energy's been driving it. Energy is roughly flat on the day, looking at XLE. So I think that if we ever do have a rally in the market, it's difficult to have not saying it's impossible, but it is difficult to have a rally if technology is not on board. And at least for today, technology appears to be on board. Google is up nearly 2% on the day. It's up $2.20. So we do have that working in our favor. Tesla, it's not up a Tesla amount, but it is up just under 2% on the day. So Tesla, you like to see up 5 or 6% on the day in a technology rally, or at least I do anyway. And then our beloved NVIDIA, not up quite 2%, but it's at least up on the day. So we are getting some positive news from some of the individual names that are driving it, but we do not have any help from Amazon. Amazon is roughly flat on the day. Apple, it's up 84 cents on the day. So we are getting a little bit of movement from Apple, but not a ton. So if we are going to have a more sustained rally, I believe that if it's going to come from the most powerful rally-producing mechanism in existence, that is the technology sector, in my opinion, we're going to need more help. And so you can look at it two ways. You can say, okay, we're not getting the help we need, or it's a time to buy before we get the help we need, and it will be too late. That's your decision to make. Back to you, Mark.
All right, let's see what kind of decisions the market is making right now from a volume perspective. And the answer is everybody wants a whole bunch of it. A lot of paper changing hands out there today. Much more than you might expect, given the move we're having today. Usually an up day, we've seen a lot of those of late. So usually they don't come commensurate with a lot of paper. But you know what? We are kind of breaking the trend. We were red for most of the week. So maybe just that kind of breaking of the trend, seeing a little bit of green on the screen is enough to spark some action. Because we are seeing some out there today. VIX already, listeners, 645,000 contracts on the tape. That sounds like a lot. It's because it is. I mean, our ADV was less than that not too long ago. In fact, last show, I think that was our ADV. It's higher now. All it takes is a little bit of Powell, a little bit of that Fed rub to get the VIX numbers back up over 700K. In fact, the ADV, 743,000 contracts. Seems like we're on track to hit that today unless VIX just falls asleep for the rest of the session. Let's look really quickly. Listen, what's the hot thing out there today? It's 61,000 of the Jan 45s and 44,000 of the OC 45s. So maybe a bit of a roll out there. I'll have to go dig in. We'll do obviously more analysis on the paper flow tomorrow on vol views. But there's 105,000 contracts right there just in that OC Jan 45 call spread there. So intriguing stuff there. SPY, no slouch, 5 3/4 million contracts already on the tape. I mean, just explosion, tsunami of paper, listeners. The ADV, 8.2 million. So SPY looking robust as usual. And you know the S is putting up numbers today if everything else is. The S already closing in on 2 million contracts, 1.83 million. That would have been the high. That would have been the absolute high that the S could have hit a little over a year ago. You top out over 2 million, things are just exploding. And now these days we can threaten it by almost noon with all this 0-day love. The ADV, 2.94 million. By the way, I did just bring it up, listeners. And yep, we are once again 20 for 20. Most actives in the SPX, all expiring today. We go out to the top 40. And you know what? I see 1, 2, 3, 4. Including the Dees 4800s. How about that? There's a whopping 4 of the top 40. That seems to be the ratio we're used to now. 0 of the top 20 and somewhere around 5 of the top 40. Again, that just shows you how much SPX has been transformed. This is not a small retail product. This is not your grandma from Iowa. This is big funds slinging 0-day like it's going out of style. It's fascinating to watch. Small caps, IWM, 695,000 contracts. Again, small caps. Also bringing the heat out there today. IWM right now, listeners, up 1%. So a banger day for small caps. The ADV threatening a million again. 906,000 contracts And the Q's 2.5 million. The Q's actually looking comparatively light compared to everything else. We've seen the Q's this robust before with the other indexes not doing as much commensurate volume. The Q's today, 2.5 million, still about 1 million away from their ADV, which is about 3.5 million. Let's get out to the single names. Let's see if this is the kind of banger day that you'd expect on the single name front. And the answer is no. Once again, listeners, it is all macro all the time out there. It is so funny how the focus shifts back and forth. Macro, micro, macro, micro. Today we are back in the micro trend because it only cost you 139,000 contracts to break into the top 10 right now, listeners. I'll have to go back and check, but that might be the lightest we've seen for the year for breaking into the top 10. I can't recall off the top of my head another day where we've been doing the show this time of the show and had lower volume to break into the top 10. So, I mean, not even in the heart of August did we see these kind of numbers. So, yeah, that's the kind of day it is, listen. And to get to the top of it, a little bit different, but we'll get there. Number 10, that gets you to the artist formerly known as Google, now Alphabet. This is why we used to joke about Alphabet. We used to say, oh, if Alphabet's in the top 10, you know it's a snoozer. Now, of course, the quote-unquote AI equation has changed that a little bit. Alphabet getting a bit of a lift today, 132.80 up 2.25. Good for a whopping and astounding 139,000 contracts. Number 9, a little bit more respectable, Microsoft, 213. As the Uncle Mike alluded to, Microsoft 314.30 up about $1.50 today. Again, good for 213,000 contracts and the number 9 spot out there. Number 8, popping off with some earnings. It's good old Micron. They used to be a tech name back when I was on the CBOE. They were one of the hot names everybody wanted to fight to get out to. These days, not usually top of mind for a lot of our listeners when they're thinking of the hot tech names they want to sling, but around earnings time, Micron can do some business, and that's what we're seeing right now. Number 8, 294,000 contracts. Micron, 65.60 off about 260 or nearly 4% today. Looks like they crushed it down as low as 63.83. So, yeah, not looking great post-earnings. One analyst says people are thinking too optimistically about the rebound going on out there. So, demand recovery off to a slow start, Micron says. So, there you go, listeners. Maybe not the ray of sunshine you were looking for if you're a bull out there in Micron. If you're looking for a little bit of a ray of sunshine, just look at number 7, listeners. Palantir, 308,000 contracts. This one seemed like it was starting to dwindle just in the last few sessions. Popping hard today, up a full buck or 6.7%. Trading 15.86 right now, so a nice run for them. Popping hard. Apparently they won a $250,000 AI deal with the Defense Department. And that's popping them a full buck out there today. Either way, they're good for number 7, 308,000 contracts on the tape there, listeners. Then we go to number 6, the artist formerly known as Facebook, Meta, 304.20, up about $6.50 or 2.2% today. So getting back a lot of their luster. Let's see, during the week they got crushed down to about 292. So they have rallied nice, about 12 handles from that nadir. That was just yesterday, actually. So they have rallied 12 handles just in the last roughly 24 hours. So nice little pop for good old Meta. And again, good for 361,000 contracts. Number 5, the first half of the chip zone coming right about where we expect it. Also about the volume we expect these days. We expect them somewhere around 600K, and that's the case. AMD, 581,000. AMD, 102.90, up nearly $5, 480 today. So nice little pop for AMD out there today as well. Number 4, it's the Amazonians, the long arm of antitrust. That's been rumored about them for a while. Finally came for them this week, 126.15, up about 15 cents. So kind of roughly unched on the day. Of course, on the week, it's been a bit of a rough one off, a little over 5 handles and nearly 4%, even though they have rebounded from the low of the week of about 123.64. So popping about $2.50 from there. Of course, antitrust coming for them, coming for Google as well, and they've managed to shrug it off out there as well. So kind of a bit of a contentious issue out there, but nonetheless, Amazon kind of treading water. Again, good for number 4 today, 601,000 contracts. Number 3, the other half of the chip zone, the name you know and love or perhaps hate. It is NVIDIA, the tip, the bleeding tip of the AI spare, unless you count OpenAI, of course, which is coming soon to a trading platform near you. A 430.82 for an NVIDIA, up about 614 or about 1.5% out there today. So pretty much a rounding error day for NVIDIA. Number 2, it's that fruit company, listeners. Everyone's wondering when we're going to see the headset they promised. Of course, Meta unveiling their new one earlier this week, their competitor, their rival to the Apple headset. So interesting stuff out there. Apple kind of drifting north today, up about 40 cents, trading 170.83 right now. So still below their 198.25 high they set recently, but also far, far removed from their 124.17 low they set not that long ago as well. So intriguing stuff out there. Apple good for 748,000 contracts. And the number 1, the big dog, you know what it is. It's Tesla, 1.3 million yet again. 245.90 up about $5.40. So as Uncle Mike alluded to, a rounding error type of day for Tesla as well. They got down to as low as 238.65. The high was 247.55. So that sounds a little bit more like a Tesla range. But 1.3 million contracts on the tape. Not a ton popping off on the earnings front, with the exception of the name I just talked about, which is, of course, Micron. Listeners. They were popping off yesterday. So some intriguing stuff to be found out there. Obviously, they were driving some paper out there in Micron land. Coming up today after the bell, we still have Nike. They were at 89.42 when we ran this report, listeners. They were pricing in $5. In the past, they've moved $6.50. So they're cutting off the top there for the good old Nike straddle. Let's see. Nike is trading a little bit lower now, 89.25 since we ran this report. But wow, that's taking some juice off the top out there in Nike. Is the worst behind us? We shall see. It looks like Diz back in the 70 handle, 79.75. So threatening some impressive lows as well. I'm not sure why they suggest on my screen Disney as a similar comparison to Nike. I don't think Disney even makes shoes, but I digress. I love these screens they give me. All right, and looking at the season right now, hanging out right at 101%. Seems like we're pretty much going to settle out right around par, listeners, which was kind of about what we expected. Our long-term average is 98%. Again, if you want to see any of that stuff for yourselves, only one place to go, theoptionsinsider.com. Click on the Options News and Articles tab to begin your voyage, your journey of destiny to the world of unusual activity. Meanwhile, it's time for us to continue our journey to the dark side, listeners. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. It's that time. It's Thursday, listeners. Time to unleash the FLOWMASTER. He should know a thing or two about that trade alert platform that we use here on the show all the time because he built the darn thing. Mr. FLOWMASTER, sir, what did you spot out there today and this week, sir? Where should we begin our journey today?
Well, today we're going to take a little different journey. Because the biggest trade in the entire single stock world yesterday was kind of one that's way below the radar because it was a 80,000 lot spread in SOFI, which is a fintech, but it traded Flex. And I know option geeks know this, but maybe not everybody knows this. Yeah. Flex options have been around for about 25 years, and they're basically custom expiration, custom strike, options that can be traded on anything that has listed options, and but they're kind of traded by appointment. They only trade on the 4 floor exchanges right now, so CBOE, Amex, Arca, and Philex. And so what I saw yesterday, and we do have these in Trade Alert, and we do a pretty nice job clarifying exactly what's going on. So yesterday there were 80,000 of the September 18th of 2026, 22.5, 32 call spread, vertical call spreads, the 22.5, 32, and it traded for a net debit of 53 cents. Now this is a 3-year trade, and that long call strike that they're buying is exactly 3 times the stock price that this trade was actually tied to. It was tied to 7.5 stock, and with flex trades, it's extra hard to figure out a lot of things. There's no bid offer, so you have a much tougher time figuring out if something was buyer or seller, and then also tying it to the matching stock block is much trickier because although CBOE does a really nice job of kind of printing these things in real time, some of the other exchanges they don't have the same technology that we do, so these things trade weirdly late. So like in this case, I think the stock was about 7 or 8 minutes different from the option print, which doesn't happen in the listed world. So both of these legs opened. It's a big trade. It's very far out of the money. And, so far it's one of these, fintech names that it does get hot every once in a while. It's a 3-year trade. They've got a lot of time for this thing to work out. And to me, it really was an odd block, and especially because it's just hard to see these things in the market.
This is why we bring the FLOWMASTER onto the show. He uncovers these nuggets for us. You mentioned really quickly, this is for my own edification, Mr. FLOWMASTER. You said you can find this in the trade alert. Where do you find? Because I'm looking at SOFI from yesterday. Is it a special tab to find the flex?
So the command to see the open interest is just /flex and then the symbol. So /flex SOFI. And to see the actual trades themselves, the command is flex alerts, which I will turn on for you because you might not have the permission to see it, but anybody that signs up for Trade Alert can see it if they want them. And I'll tell you, the flex activity has been one of the growth areas in the industry. Yesterday, we had almost 400,000 contracts trade. And it used to be these weird, big OTC style trades that would only print, a handful of times a day or a week. Now we're seeing a lot of flex activity, even in down as small as like 1 and 2 lot trades. And it's not retail. They're virtually impossible to trade through any retail platform. But a lot of it is these actively managed ETFs that use options and these buffer protect ETFs. And in fact, on a kind of related note, is there were headlines last week about some new ETFs using 0-day options, and that's kind of what they can do as well. So like these ETFs that sell or buy options often use flex because it can get them the exact percent strike that they want.
Yeah, this is a fascinating one. Just to recap, listeners, that was an 80,000 lot, so not small at all, of the SEP 2026. 22 half, 32, so a $9.50 vertical expiring in 2026, paying roughly 50 cents for that against stock, selling stock at $7.50, roughly 880,000 times. You like that, listeners? You like buying that vertical? You like doing it versus stock, perhaps without stock? I'm curious what you think of that. Mr. Rock Lobster, sir, I'm guessing you missed this one as well because the flex tends to fly under the radar, somewhat stealthy paper out there. But what are your thoughts on a 3-year vertical against stock in SOFI, sir, and at these strikes?
This is a very intriguing trade. I have my closet theory is that the CBOE will slowly take over the over-the-counter market with their flex trades because of the quality of the OCC cleared, so you have like solid counterparties. I've been waiting to buy CBOE stock actually if it would ever sell off, but it doesn't. So I think this is a huge growth area. Personally, that's just an opinion. But of course they'll fight all the big banks the whole way to do it. Anyway, but I don't know. This is an interesting, it's delta neutral, probably a relatively low Vega trade. The interesting thing is the stock versus that. So they bought the call spread and sold stock. It's an interesting one. My guess, maybe possibly they will unwound their stock. Let's say they bought it for a cheap price and they're looking for more leverage with buying the call spreads. I think it's an interesting trade. It's an interesting stock replacement idea. But overall, I would say this is probably a pretty bullish bet if I look at it that way. It's starting delta neutral, but I think they're either rolling out of their calls or they're looking for something big to happen. Or just SOFI, becomes a, $22, $23 number. But an interesting trade. I'm not normally a fan of buying out of the money calls long term against short stock because of vol compression, but maybe this works. I was guessing I got 80,000. Maybe it works.
I was guessing you'd probably like it better the other way: buy the stock and sell the calls. But that sounds more like a rock lobster type of trade than this way. But yes, intriguing stuff out there, listeners. You like a 3-year vertical? That's an interesting one. Certainly an interesting approach out there in the land of SOFI. Let's completely flip the script now, listeners. From going out 3 years. Let's just go to tomorrow, shall we? Let's set our sights right on the here and now to a name we were just talking about. This is Micron Technology, ticker symbol MU. You know what's going on with them today. They're getting hammered off a little over $3, about $3.10, off about 4.5% right now, trading a little bit north of $65 on the year. A year ago it was $51. They're still up 27% or about 14 handles on the year, but obviously given a lot of that back. They had topped out this year at about 74, almost $75. Clearly not there anymore, but still, obviously, still above where they were a year ago. So Micron bulls still have something to look for. And you know what? It seems like one of those bulls is coming back with a vengeance right now. They heard the number. They heard the number from the earnings, and they decided, you know what? Earnings be damned. This sell-off is overdone, and we are coming in, and we are coming in fast, and we are coming in furious for tomorrow. They came in and scooped this morning 2,175 of the SEP 66 calls, so roughly $1 out of the money calls. These are expiring tomorrow, listeners, so the stock needs to get a move on in their direction. They bought these this morning when the stock was right around $65.50, so right away, you could tell things have not moved in their favor, listeners. The stock has gone $0.50 in the wrong direction. So now they need this thing to really giddy up by tomorrow. It needs to not just turn around back up to 66, but then carry them another $0.50 in the right direction. So I think fair to say, did they overpay for these? Probably a little bit. Of course, hindsight, always 20/20, listeners. So yeah, a little bit of hot, fast, and fresh earnings paper in Micron. One day. Everyone wants 0 day in single names. Here you go, listeners. A 1-day trade. Mr. FLOWMASTER, if you could peel your eyes away from the 3-year flex. What are your thoughts on swinging for the fences? 1 day, then and done, sir, in Micron.
Well, like I said at the beginning, I think that tomorrow kind of has a chance of being a little bit more volatile than our average Friday. So I would keep that in mind. I was looking, I mean, it's down almost 5%, but that's about what the straddle was pricing in, I think, wasn't it? So I don't think it's a super big surprise, but I would, I don't know. I think I'm really interested to see if anything unusual happens tomorrow.
Mr. Rock Lobster, same question for you, sir. You like this 1-day call? I'm guessing the fact that they failed your first test, stock moving $0.50 against them, you're probably not a big fan.
Yeah, I don't. It's not my favorite thing when you buy the calls, but I have to say this is a pretty aggressive purchase. We were actually looking at some call buying in here. I'm like, I just felt like everybody jumping into the semis was kind of knee jerky, like, oh, the semis are down, so I'm going to jump in and buy them. So it did give me pause because I saw like a jillion calls going up in Amazon as well today. I think people piled in at the bottom. And now they're kind of not looking great. Things are kind of sagging a little bit. So anyway, that's what I would say on that particular score.
All right, and we'll get out of here on this one, listeners. This is a newcomer, or if not, it's a name we have not talked about in quite a long time. This is Shoals Technologies Group, Inc., ticker symbol SHLS. Let's call them shills just for fun. Trading 18 3/4, off about 90 cents or 4.5%. So they're feeling the heat there today as well. A year ago, they were trading $21, so they've had a bit of a rough year, off 261 or about a little over 12%. A lot of that coming today, listeners. They rallied them pretty quickly. They got up to 32, almost 32.5 back on, November 17th of last year. Ever since then, it's kind of been mostly downside. They crushed it for the first time all the way down to $18 back in May. Then they did manage to rally it again. Got up to about 26 3/4 in July. And then that was kind of all she wrote. They crushed it back down to where it is right now, 18 3/4. And let's see, what did our Eye of Sauron find out there, listeners? Someone, again, liking themselves a little bit of upside. This time, though, looks like they're giving themselves a little bit more room to run than just one day. They came and scooped 4,000 of the OC20 calls this morning. They paid 69 cents, so not nothing. That's a 58 vol, listen. That's a little rich. The stock was about a dime higher, so not a huge stock move since they put this on. And they're not getting any earnings in this. The earnings are on November 2nd, so they're just buying some fairly juicy. Actually, looks like they paid through the offer for these things. So, yeah, very juicy call. I guess they really had to get these OC20s in everyone's new favorite name, SCHWARTZ Technologies Group. Mr. Flowmaster, do you love these OC20s paying through the offer? They just had to have some upside in SCHWARTZ, sir.
I do like to see a nice aggressive buyer, and that's what that is. There were plenty offered at 65 cents, and that's what they got on the first chunk. But they bought all the way through this sweep, right? Because we capture these things as one big old burst. It was 119 slices. It touched 16 exchanges, which I used to say all 16 exchanges, but there's actually 17 as of yesterday. So they did not actually hit the new exchange, which is MEMX, because SCHWARTZ is not yet listed on that exchange. But this is the kind of trade that I would certainly consider jumping into maybe a little bit of stock or something, because it's a decent piece of change for 3-week trade.
Yeah, it's a good chunk of change. Mr. Rock Lobster, are you loving this swing for the upside fences in SCHWARTZ, which, as we all learned, not listed on MEMX, so we don't want to touch
it. 16 exchanges. I don't. I just hear that. I'm like, wow. I'm sure they all, at every exchange now that they add, adds tremendous value to the consumer. Anyway, I saw this trade and I'm like, this did look like quite an outlier to me. They kind of like an E-energy battery thingy. Actually the company makes money for an E company. Normally they don't, EV type company. They don't, except for Tesla, obviously, but a lot of them kind of struggle. So I thought that was kind of interesting as far as that goes. So, but it did look like an outlier paper, and because it just doesn't trade that much. So I was going to give it actually a little day tomorrow for our Delta strike, because it is kind of have some sort of couple of ugly candles lately. But it was like a $28 stock not very long ago. So it's definitely, I agree with Henry quite a bit on this one. It has the hairs on the back of my neck standing up type of paper.
And Mr. Flowmaster, you were asking about the Micron straddle. They're off a little over $3, about $3.20, and they were pricing in about $3.81 as of our last report. So you're right, kind of underperforming their straddle a little bit compared to what they're moving. Of course, in the past, they've moved about 310, so they're moving almost exactly in line with what they've done in the past. And if you want that kind of data, listeners, you know where to go. TheOptionsInsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we continue our journey right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, Mail Block. We got a timely question here from PTFE. He or she wants to know, what is the listing process at exchanges like CBOE, doesn't include MEMX in there, like CBOE, for new IPOs like ARM? Oh, very timely. How long does it typically take, and is there some type of volume or time requirement before they are willing to list options on them? Interesting question, PTFE. We have seen that time frame accelerate dramatically as all the exchanges have become for-profit public entities. They don't want to keep you folks waiting for what you want to trade. You guys want the hot IPOs. They want to give them to you. So we have seen that window shrink. I think it used to be roughly 2 weeks. It is now well inside that. But Mr. Flowmaster, as our duly appointed exchange representative, sir, what do you have to say here for Mr. or Mrs. PTFE? They want to know, what's the process for listing options on new IPOs like ARM?
Well, that is such a perfect question because I have a command in our system to remind me. It used to have all these weird requirements like 7 million shares and 2,000 individual holders and average daily volume over 2.5 million shares and like all these weird things. And in the end, that all kind of shook out to I think it was 4 trading days after the IPO. If it was like a really big IPO that automatically meant all those things, they changed it just a few months ago. So it's simpler. Basically, any IPO that has market cap over $3 billion in value can have options, period. And they are allowed to request them the day after the IPO and list them the next day. So 2 days after the IPO. And that's why we got that in ARM. And that's what you're going to see in the future. And ETFs are a little different. ETFs already were 2 days. So that seems to be as quick as you can get it because it has to start trading so that the exchanges can actually file to list them. And then it takes a day before they get the approval. So 2 days.
There you go. PTFE, 2 days. Yeah, you can't ask for much faster than that. You have to file some paperwork. You got to add the strikes and all the new listings. It's not just flipping a switch. So, yeah, 2 days, man. That's if you had told me years ago they could add a new name, get it up and running in 2 days, I would have said madness, voodoo, heresy. And yet, when everyone's trading 0 day, 2 days must seem like an eternity. But that's pretty darn speedy to me. Let's go around the horn really quickly as well. I want to get everyone's thoughts on our question of the week. Our question of the week, a very timely one as well this week, listeners. We're asking you right now. We've seen a little bit of red on the screen lately, obviously not today. And so we said it's time to gauge your broad market sentiment. Quite simply, where are you comfortable buying into, or if you got some in your back pocket like Uncle Mike, buying more SPX right now? And gave you 4 choices right around here, which when we posted it, we were a little bit north of 4,300, which we're kind of where we are right now, a little bit below it. So we said right here, about 4,300 to 43.5. Or a little bit lower, so below 4,200, which it seemed like we were trending towards not too long ago. Or even lower, so you're not buying back in until below 4,000. Or you're in our buddy Matt from Oratz's camp, who he's in the 3,000 before 5,000 camp. You're waiting until we're back below the lows from last year, which is below 3,600. Mr. Uncle Mike, as our resident bull in residence, like that, a lot of residencies there. As our, let's say, our resident bull in chief. What are your thoughts? And then what do you think our audience is voting for, sir?
I think right here is not a bad spot to be just because of the fact that if we do go down a little bit more, I'd be comfortable waiting it out. Our all-time highs are roughly a little over 4,800, and we are off the all-time highs, of course, but we've established a pretty decent base, so I'd be okay even if I had more to buy and I could buy with client money. I would be comfortable buying more here and riding it down a little bit because I think we're strong right now from a market standpoint.
Uncle Mike, feeling the strength. Mr. Rock Lobster, you agree, disagree? And what is your vote? And then what do you think our audience is voting for, more importantly?
I don't know. I'm not too far away from. I think the audience is looking for lower. And I'm going to say the audience is saying 4,000 for the bottom. Me, it's like I'm a little torn on this. So my simple answer is I'm adding a little every week to bring my equity exposure up to like what I would call full, which basically is about 80% of the account for me. I kind of go in and out of that. So I'm just adding more every week now, not really knowing what the heck is going to happen, but I don't know. So for me, I don't feel like this is a bad place to start, buying more stocks and stuff. So the simple answer is I think this is an okay right now, but I think the listeners are going to say like 4,000 or lower.
Mr. Flowmaster, final word is yours, sir. What are you feeling, and what do you think our audience is feeling, sir?
I actually agree with Mike. I let some stuff get called away over the last couple weeks, and I was kind of happy about it, and I have started to nibble back in. But I'll tell you one thing, I am actually kind of actively trying to buy equal-weighted SPX instead of the SPY, or instead of the cap weighted, and that's kind of because of some of the comments I heard at the Risk Summit where they were talking about everybody was quite nervous that the top 7 names were 30% of the index or something close to that. So I'd kind of rather have the equal weighted. There's no index options on it. There is an ETF. There's probably a few ETFs. I was buying RSP instead of SPY. And there are options on that, although they're not very liquid. But I would think that the audience is probably they might be buying some here. I'm not waiting. I'm hoping we don't go down to 3,000 something. I like Matt a lot, but he lives up there in the boonies of New Hampshire where everybody's survivalist, so he might have a bias. But we are gonna go into an election cycle, and there's a lot of crazy stuff in the world. So I certainly would not dive in, but I don't think it's a terrible time to be nibbling at getting long.
The preppers have gotten to him. They got in his head. Watch out, Mr. Rock Lobster. They're coming for you as well. 2 guys who live in compounds in the far hinterlands of the Northeast. Right now, our audience, not quite as characteristically dire and bearish as they usually are. They are leaning lower, but only a little bit lower. 42.1% saying a little lower. They want to nibble below 4,200. Then the bears kick in, the Mac crowd. Below the 2022 low, below 3,600, that's 24.6% of you. So nearly a quarter of you are waiting for those levels to start nibbling back in. Then we have even lower, below 4,000, 19.3%. Only 14% agree with Uncle Mike. They want to start nibbling here between 4,300 and 43.5. Get in there if you haven't voted. At Options is the place to go. As we go into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, that music means we once again have gassed on to pretty much the end of the episode. So we're going to do a combo of Around the Block, a lot of flex trades to talk about today. You can't blame us. A combo of Around the Block and what's coming down the pike that may interest you. Let's start with the FLOWMASTER. Mr. FLOWMASTER, sir, what are you keeping an eye on until your next appearance next Thursday? And then if folks want access to this flex analysis and all these other goodies you're talking about in the land of Trade Alert, where should they go? What should they do?
I'm going to be watching. I'm going to be watching this end of quarter expiration, and then just continuing to kind of look for some of these dislocations. And if we don't get it, then I'll keep my trades small. And they can always find us at SIBO.com/RMA. SIBO, that stands for Risk and Market Analytics. SIBO.com/RMA.
SIBO.com/RMA. You get Trade Alert. You can get live vol there. A lot of great nuggets. We obviously focus on Trade Alert a lot here because we use it throughout the show. A lot of this data we're talking about throughout the show coming at you from the land of Trade Alert, but other platforms there as well for you folks to sink your teeth into. SIBO.com/RMA. Mr. Uncle Mike, what are you keeping an eye on until your next appearance on Monday? And where should folks go if they want more Uncle Mike in their lives?
Just watching to see what the 4,300 level gives us, if it's the magnet or not for the weekend. And if you want to hear more Uncle Mike in your life, you can follow me on Twitter at Mike Tosaw, TOSAW, or check out my website, stcharleswealth.com.
And last but not least, he's our prepper in residence. He is the Rock Lobster. Mr. Rock Lobster, sir, what are you keeping an eye on until your next appearance? And where should folks go if they want more Rock Lobster in their lives?
Oh, what am I keeping an eye? Yeah, and we got the end of quarter, so we got to wait for that. We got to wait for our grandees in Washington, who all have been in Congress too long, so they can decide on how much more of our money they will spend. And I think that is impacting the market too much. But yeah, it'll be interesting to see how just end of quarter goes. And, and I guess we'll talk about vol views tomorrow, but, we still have like 12% realized vol, and we got a 17 VIX. So let's see how long that these two twains can be so separate. And so those are the things I'm looking at. Go to optionpit.com. And if you heard this here show, 888-TRADE-01, you get 10% off anything we sell. My products are kicking serious butt, so if you want to learn how to trade options and make money while you're learning how to trade, we send alerts out. Everything is all in real time. crazy service. So I trade all my own trades. You can go figure it out. So, or you could just wait till tomorrow and listen to Longo and I talk about oddities and vol again. There you go.
There you go. OptionPit.com. That's going to do it for us on the show today. Not going to do it on the network, though. Stay tuned. If you're listening in the live, we'll pump some fun stuff in. Be back in a little bit with the once future and now present Dr. Vix to hold court. Probably some equity vol going to sneak in there, but also hold court on vol in energy and commodity options. You name it, all things that are cooking over there at CME coming up on TWIFO in a little bit. Back again tomorrow, as the Rock Lobster mentioned, for vol views, noon Central, 1 p.m. Eastern. After that, if you want a double dose of Rock Lobster, you're going to get it tomorrow. Back for options oddities exclusively for you pro folks. Remember, coming up on the end of the month, get in there on the pro now, theoptionsinsider.com/pro. Not only do you get 200 plus episodes coming at you the second you hit that button, we'll keep you engaged, listeners, but also you get your name in the hat for the September Pro Trading Crate, theoptionsinsider.com/pro. Then you're going off, you're having a great weekend, you're back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.